Hello! Today is Monday, June 13th, and these are your data highlights. Oracle report Q4 late Monday, and some investors are hoping for signs of recovery after the software giant has fallen almost 25% this year. Some analysts believe a turnaround is imminent as Oracle's shift to cloud-based business continues. Short interest remains low at just 0.8% of free float, so no notable short squeeze is expected if results do show signs of a turnaround. Oracle projects profits of $1.35 to $1.39 per share for the quarter, with consensus at $1.37 and a 3 to 5% revenue growth. An ORTEX EPS buy signal emerged on Friday after the recent consensus analyst estimate upgrades contradicted the share price weakness. Redbox Entertainment is in focus after its 83% rise last week. Redbox is currently indicating up another 31% pre-market at $17.33. Short interest sits at 100% utilization and 224% of free float on loan. We will get to see the latest live intraday short interest update at 7 AM ET. Certain stocks have, at times, seen short interest that is greater than 100% of free float. That may initially seem impossible, but here's how it works. Consider investor A holds 100 shares and chooses to lend those shares to investor B. Next, B then short sells the 100 shares to investor C, who is now long 100 shares. If investor C then lends out the 100 shares to investor D to sell short, then there are now 200 shares held short in this example, after starting with 100 shares long. This demonstrates how there can be a multiplier effect on tradable shares as the lending cycle continues. This process is similar to how traditional banks operate and influence the money supply. A customer deposits cash, which the bank will then use to fund loans, which subsequently increases the money supply circulating in the economy. That is how enough short selling and securities lending activity can cause short interest to exceed 100% of free float. For more interesting data highlights, try for free today at ortex.com.